Hello. Anything that we discuss is going to be for educational purposes. I'd like to welcome you all to Digital Trading Floor. It's a platform where we disseminate financial data in real time to provide actionable insights using live streaming technologies. So follow along as I navigate the markets by trading in my own account, and hopefully you will learn how I analyze the data in real time to make trading decisions. The purpose of making this video is to analyze Nifty options open interest data. We would be analyzing Nifty on multiple time frames, and we would be framing a view for February uh, 2021. Apart from the index, we would be discussing our stock watch list. So let's start by analyzing Nifty options open interest data. So if we see the option max pain data for 25th February expiry contract, you will see that the max pain on the monthly expiry contract is at 14,000 level. So if market was to expire at 14,000 level on 25th February, option writers are going to suffer the least amount of losses, theoretically speaking. If we analyze the options open interest data, you will see that highest amount of calls have been written at 14,000 strike, followed by 14,500 strike. And if we see the puts, highest amount of puts have been written at 13,500 strike, followed by 13,400 strike. So it gives us a broad trading range of 14,500 to 13,400 for the February monthly expiry contract. Now we are going to be analyzing Nifty on multiple time frames. So for that I'm using iCharts.in website, and we would be analyzing Nifty on multiple time frames. So let's start with the yearly time frame. So if you see the yearly time frame, what has happened is that market is trading below the yearly open. So it is come under control of sellers on the yearly time frame. So as long as market remains below 13,996, for us it is going to be in a downtrend from an yearly perspective. It is most likely that we can trade lower, or of course if it's trade above 13,996, it would be a pivot. So above 13,996, market would again come under control of buyers, but until that happens we would have to look for selling opportunities. And if we see the quarterly time frame, so since the new quarterly open was same as January open, so here you will see that it is also under control of sellers. And if we see the monthly time frame, you will see that currently it is also under control of sellers. And here we can see on the monthly time frame, and since February has opened today, our opening is 13,758. So above 13,758 we would be under control of buyers on the monthly time frame. However, you have to remember that the currently yearly open as well as the quarterly open is at 13,996. So we need to trade above 13,996 to get full time frame continuity to the upside on all the time frames. But until that happens, we are currently in conflict. That is, monthly is under control of buyers as well as weekly is under control of buyers, because today is Monday, a new week, and the day has started. So at this point of time and price, we have conflict between monthly time frame as well as our quarterly time frames. Here you will see the quarterly time frame as well as the yearly time frame, as they are under control of sellers right now. As on the quarterly and the yearly time frame, market is trading below the open. And if we see the monthly open for February as well as the weekly, as today is start of new week, it is under control of buyers right now above 13,758. So straight away there is conflict at this point of time. So only above 13,996 we would have a situation in which we have full time frame continuity to the upside. Or if market trade below 13,758, in that scenario we would have full time frame continuity to the downside, with all the time frames coming under control of sellers, that is monthly, quarterly, as well as the yearly time frame. So based on the monthly time frame, we get the following scenario for February. So we would be bullish above 13,634 levels, and we can potentially trade towards 14,212 levels, 14,753 levels, and potentially 15,065 in the month of February. Or on the flip side, below 13,596 levels, we can potentially trade towards 13,284, 12,891, and 12,477 levels. And you have to remember that today market has opened at 13,758. So we should be looking for buying opportunities. However, we have to remember that at this point of time and price, that there is conflict among yearly, quarterly time frame against the monthly time frame. So above 13,996, we would have a situation of full time frame continuity to the upside, and we can potentially trade towards 14,212, 14,753, and 15,065 levels potentially. And today is our budget, so we would also have to see what happens in the budget. And now we would be discussing our stock watch list for the month of February. The stocks that we are tracking are Zeal, Escorts, Indigo, and Glenmark. So on the monthly time frame, these stocks have formed an inside candle. So on the monthly time frame, we have formed an inside candle on Zeal, which it is about to break to the downside. So we'll not be making any trades in Zeal. We'll only look for buying opportunity with respect to uh, accumulating delivery in a demat account only if Zeal trades above 236.95 levels. And until that happens, we'll not be making any positional trade in Zeal, as we can only buy deliveries to hold in a demat, and we cannot short sell. Of course, aggressive traders, they can look for selling opportunity, but from a monthly perspective, we would be looking only for buying opportunities. So in Zeal, we look for buying opportunity only above 236.95 levels, else we'll not be looking to accumulate any deliveries in our demat account. And second stock is Escorts. So Escorts, you will see that last month was an inside candlestick which has broken to the downside. So we'll look for buying opportunity only above 13,389.8 levels. However, it has broken to the downside, so we would have to observe this month's open, that is February open. So above 1240.1 levels, we can potentially form an outside monthly candlestick for the month of February. So instead of buying on full quantity, one can look to accumulate 35 to 40% of the initial size at above 1240.1 levels, because the inside candlestick has broken to the downside. So inside candles, they are formed when there is an equilibrium between both the buyers and the sellers. Since it has broken to the downside, and if it starts moving up, then there is a high chance that we can potentially form an outside candle. So instead of our full size, because we would have purchased full size above 1389.8 levels, because it would have been breakout of the monthly candle to the monthly inside candle to the upside. But since it has already broken to the downside and it may reverse above 1240 levels, so for potential outside monthly candle in February, so for that, if it trades above 1240.1, will accumulate position but at a relatively smaller size. And our third stock is Indigo. So it was an inside monthly candle, and currently it is again an inside monthly candle so far. So we'll look for accumulating Indigo stock only above 1779.1 levels. Else we'll not be looking to buy this stock. And our final stock is Glenmark. Again in Glenmark, it is same situation as Escorts, because the monthly candlestick, inside candlestick previous month inside candlestick has broken to the downside. So if it starts trading above 473.5 levels, then we'll look for buying opportunity only, but we would be buying it with a relatively small quantity, and because we would have opted for a higher quantity if we would have broken it to the upside, that is above 530 2.1 levels. But since it first broke to the downside, there's a chance that it can reverse and form an outside candlestick, but will not be uh, establishing a full size position. Finally, I like to summarize that we are in a broad range of 14,500 to 13,400 level based on the overall open interest data, and max pain for the monthly expiry contract for February is at 14,000 level. So if market was to expire around 13,950 or 14,050 odd levels on the monthly contract on 25th February, then option writers at 14,000 strike are going to suffer the least amount of losses, theoretically speaking, of course. And our scenario for the month of February is above 13,634, we can trade towards 14,212, 14,753, and 15,065 levels potentially. And we have to remember that on the yearly time frame as well as the quarterly time frame, uh, which is at the openings are at 13,996. So above 13,996, we would be in a situation of full time frame continuity to the upside with all the time frames coming under control of buyers. And on the flip side, we would be bearish below 13,596 levels, where it on breaking of those level, it can potentially trade towards 13,284, 12,891, and potentially 12,477 levels. And our stock watch list comprises of inside candlesticks on the monthly time frame. Finally, I would like to thank you all for watching this video. Do hit the like button and check out the description section of this video. There you can find link to all our recent blog posts. And once again, thank you for watching. Do hit the like button, share this video, and subscribe to Digital Trading Flow YouTube channel.